Hi guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets and thinking about some of the key themes that could be shaping the price action in the week ahead. So let's just start off with a little bit of news. Two stories which have improved sentiment a little bit regarding the ongoing banking crisis, inverted commas, that we've been having in the last couple of weeks. So the first is you've had this bank called First Citizens Bank shares. They've agreed to buy SVB or Silicon Valley Bank's portfolio, basically, of deposits and liabilities. So that's one positive story. The second is that we had this report over the weekend from Bloomberg that authorities in the US are considering expanding an emergency lending facility that would give specifically First Republic Bank. This is one of the banks that's sort of been teetering in the last couple of weeks, and a lot of people were speculating could be the next major US bank to go under. It could give them specifically more time to sort of improve their balance sheet position. Now, if you remember, about, when was it, maybe a week and a half ago or 2 weeks ago, you had a bunch of big banks come together with like a $30 billion bailout pretty much for First Republic Bank. Those bigger banks trying to stop this cascade of bank collapses, which could eventually come to bite them. So, yeah, I mean, some positive stories. Doesn't seem to have affected markets too much, though. You still got the S&P 500 hovering just below 4,000, above its 200-day moving average, but it's just pretty much within these recent ranges. You've got the NASDAQ unable to break above that key level that I highlighted last week, around the 12,900s, pulling back a little bit, but still close to recent highs. You've got bond yields rising a little bit, or they rose a little bit early, pulling back a little bit from highs now. On these positive stories, 10-year also up. That's the 2-year around 3.9. Now you got the 10-year trying to get back to 3.5. Dixie pulling back a little bit, rejecting resistance in the form of its 50-day moving average, back to just below 103, but within recent ranges. Gold falling a little bit amid the uptick in yields, but still relatively close to recent highs. Well, actually, I mean, gold's been so volatile recently that, yeah, no, it's actually, 3% below recent highs, not too far off. And you got oil, which is coming back a little bit, pushing back above that previous low from last December, but still kind of within recent ranges, sort of consolidating around 70 or just below it, probably in this new lower range than the one we had earlier this month and last month, which was in the upper 70s. We're now in the sort of upper 60s, low 70s range. And then if we just look at crypto as well, you can see Bitcoin pulling back a little bit, now down around about 5%. Maybe the rally got a little bit overstretched. You could probably think that there could be a pullback down to resistance in this 25,000 sort of 200 to 400 area. This might be a nice area because you've also got the 21-day moving average coming in there. Remember, Bitcoin seen as a bit of a safe haven against this bank turmoil. So these positive bank headlines probably not the best for Bitcoin, especially if it means that the Fed can do more tightening and all this kind of stuff as well, which means that the outlook for financial conditions becomes a little bit tighter again. But anyway, yeah, Bitcoin dropping a little bit. In terms of what we got coming up for the rest of the week, actually, a bit of a quiet one compared to recent weeks. We do have, the main event is going to be, let's get the Forex Factory one, actually, I prefer it. This core PCE price index data out of the US on Friday. Now, this is the Fed's favoured gauge of inflation. It's expected to ease from 0.6% last month to 0.4% this month. 0.4% is still above where they want to be, though. So, yes, okay, a little bit not as bad as it was before. But still, you want this to be around 0.2. That's consistent with roughly 2% annual inflation. But yeah, in terms of the rest of the week, the main focus really is going to be on central bank speakers. You can see we've got a bunch of them. Bank of England Governor Bailey speaking today, and then tomorrow, Bank of Japan Governor speaking tomorrow. ECB President Lagarde speaking tomorrow as well. Then you got this US consumer confidence, which is always interesting, but doesn't tend to move markets too much as long as there's not a massive shift on expectations. Flash Eurozone CPI data, that'll be interesting actually, as well as the US core PCE data. You got inflation, which is still very, very hot in the Eurozone. So just seeing how that's going pretty much. Weekly US jobless claims, always interesting. Should show that the labour market remains in a very healthy state. And then we come to Friday, and I think there's a couple of it's not on the Forex Factory thing, but there's a couple of Fed speakers. Oh, there's a couple of Fed speakers on Thursday actually. Susan Collins, Thomas Barkin, Janet Yellen actually as well, Treasury Secretary. On Friday, John Williams. He's one of the big dogs at the Fed. A bit more from Lagarde. Yeah, those are the main things really. And you know, if you're a G10 currency trader, you trade the Aussie, you want to be watching CPI. If you trade the loonie, you want to be watching this GDP data. But things likely to be a little bit calmer this week because of the slightly less packed data calendar. Maybe things can be moving within recent ranges, unless there's any surprising new developments of the banking crisis. But for now, seems like sentiment there is improving, which could help the S&P 500 stabilize in this 4,000 area, you might think. But yeah, guys, that's pretty much it for this video. We'll be talking about a couple of trade ideas tomorrow. I hope you all found the video informative and enjoyable, and I will see you all in the next one.